there's still going to be a lack of inventory. So while it will drop, it's not going to be a windfall to 50%. But if you buy something with enough equity in it, you're looking for those distressed assets where you could purchase something 60, 70 cents on the dollar. If you build a little equity into it on a renovation, there's a lot of different things you could do. You fluff yourself up a good 10, 20%. And then if the market drops 10%, you're not underwater. You don't have to go bankrupt. You don't have to go into foreclosure, right? Here's what happened in 2008 and what I'm worried about with people that are happening now. And this is what I told you about with the conversations I've had with realtors. And they're like, oh, my investors buy it 100% on the dollar because they're looking for tax benefits and appreciation and all that stuff. Listen, man, you can't appreciate and get tax benefits on a losing asset, right? I mean, you can, but you don't have an exit strategy with it. You're gonna be forced to hold it. And if you're a newbie investor, not even newbie, but like you're just starting out, you got a couple properties under your belt, you can't afford to take those big hits, right? You really have to make sure that these things are paying themselves off. So one of the ways we do that is by making sure that we're building enough equity into it. But what realtors say is, they buy at 100 cents on the dollar. That's insanely foolish if you're starting out. You could buy at 100 cents on the dollar if you're a multimillionaire. I think that's the only place where it makes sense. But for most mom and pop investors, guys like myself, guys that are just starting, anyone that's, still under $10 million in assets, in my opinion, should still be buying value add opportunities, because if you lose that 10%, that could really wipe you out.
Hey, what's going on, cash flow hackers? It's Chris with Life 180, and I am here with Matt Porcaro from the 203K Way. And today we are going to talk about what is going on in the real estate market. Good luck with that one, getting that into an hour or less.
Yeah, right. Good talk for the next week.
It's funny. We were just talking before I started this, and I'm looking at my phone, looking just at the markets and all that stuff, and all these articles come up, and it's like, this week with inflation and the Fed meetings and interest rates and all these things going on, it's like, oh my gosh, it's going to be a pretty nutso week. But guys, if you don't know who Matt is, Matt runs an organization called the 203K Way. He basically, what I thought would be really fun to have Matt on, we did a video, I don't know, it's just about over a year ago or so, together on the 203K Way and just what a 203K is and how to take advantage of it. So you can go check that out. I'm sure we'll get into it a little bit in this video as well. But I thought it would be really cool to have Matt on because of the fact that right now, I feel like almost anybody with a brain can look around and realize, like, inventory sucks. Finding deals is hard.
Yep.
There's uncertainty in the market. I think there's a lot of uncertainty of the future. Like, is real estate massively overpriced? Is the inventory so low that even if the stock market goes down, is real estate going to keep going up? And like,
right.
Bottom line is, if you go and do a Google search or a YouTube search or anything like this, you're going to find 50 gurus with 50 different opinions, and each one of them is going to have their justification for why they feel how they feel. And I think anybody that says that they know for certainty what's happening, myself included, is full of crap. Like, nobody really knows. But we'd
all be millionaires if we all predicted right. It's just
exactly.
A talking point. I always try to remind people it's just a talking point. Like, when people claim that they know, or when there's a YouTube video that you watch, like, here's what the market's going to do, or here's what it's not going to do. Sure. It's clickbait, right? Because nobody actually knows. So we call a spade and say, listen, this is a talking point, but we always like to preface everything. I love what you're doing. It's just like, nobody knows. Nobody has a crystal ball, but we could all just talk about the scenarios that are going on. Totally. But your results may vary based on, what happens.
Well, it's so funny because I've been kind of guilty of that personally. Like, I've done shorts on why the market won't crash, and then I've done shorts on why the market will crash. And it's like, I'm not doing it because I think, like, I know the market's not going to crash, or I know the market's going to crash. I'm doing it because, like, as I'm going through my own journey to try to make my own decisions, I'm looking at analysis of data, and I'm just giving you data on a perspective and, like, something to back it up. And then here's this. Everybody you should go through all of it and follow exactly on both sides of the pendulum that believe. Don't just, like, so many people as humans, we have this, like, emotional confirmation bias desire, right? Where we feel this fear of the uncertainty of the market. And I think that what, like, really snowballs this doom and gloom kind of market crash perspective is that's the survival instincts that we have bred into our DNA, right? And so like we're all worried about it. And so then when we go on and we have this emotional fear, we have this confirmation bias, and we're trying to find people that align with that. And so you got to look at the positive side, but then, you know, there's so many people on the positive side that there's a conflict of interest, right? Like they have to be positive, otherwise their career and their job, they're not going to sell houses and they're not going to sell investments. They're not going to, like, so you got to kind of be able to sift through all the garbage, right? And that's what I love. And so what I think is really cool about Matt, guys, is he is really, really good. We were just talking about this before we click the record button, and there's always opportunity if you can find deals and you're willing to kind of like get up to your elbows and work and find the opportunity. And
right.
I think with a lot of people right now, there's a lot of concern about like, how do I find these deals, you know, and how do I get started in the real estate game if I haven't? Because let's face it, hedge funds are out there, cash buyers are all over the place. Everybody's moving away from California and taking their equity and putting it into places like Phoenix, where I live. It's just the market's been going through the roof because everybody moving here, I swear, is from California. But which I don't blame them, but you know, it is what it is.
Yep. Same thing with New York.
Totally. So Matt, talk to me about the environment, like your perspective on the environment right now, and why you think there are still opportunities out there. And ultimately, like you just did it with your wife, right? Like you guys just found a house and you just kind of did it. So you're modeling that you actually can go get deals, and that there is opportunity, and you did it for your primary residence. But if you were doing it from an investment perspective, it's still there.
Exactly. Yeah, man. So, you know, as you were saying, I think the thing I just really want to highlight is confirmation bias, right? And what I found with the market is the people that say one thing about the market are a background of one confirmation of, like, you know, people that are saying, oh, that, you know, everything's going to be a windfall, or like investors that think that they're just going to come in and just sweep up all the damage and make a boatload of money off of it. The people that are saying that the market's just going to go forever, they're realtors, they own brokerages, they're mortgage brokers, you know, because if they, you know, as I said to you before, you know, they'd be really shooting themselves in the foot if they told people, yeah, no, the market's a little unhealthy. I don't know if I would pay $100,000 over asking for something. So you always have to look at both sides, and a lot of people don't want to look at both sides because, like you said, it's an inherent human, like, safety factor, safe haven to kind of crawl behind what your bias is to make you feel good about your decisions. But, the people that, I just came back from my real estate mastermind. I'm in a high level one, and we meet 4 times a year. And there's guys in there that are absolute killers, and they've been around well before 2008. So they've been around to experience it. One thing I'm finding is, I can talk to this because my dad experienced it, but you have like a lot of these millennials, influencers and everything like that, anyone that bought a couple of houses in the last 10 years, it's easy for you to bet on appreciation because you never saw the other side of it, right? If you were investing in the last 12 years, you're fine. And you never saw bad. Like, you literally couldn't lose in the last 12 years if you bought real estate versus, my dad bought real estate prior to 2008 and leading up to 2008. And I saw how it wiped him out. So I see that, but it's very obvious that there's a lot of guys that haven't heard, and they haven't seen that. So at this mastermind I was at, we were really just talking about how to position yourself so that regardless of what is done, it doesn't really matter, regardless of what regardless of what the market does, whether it goes up, down, sideways, left, right, it doesn't matter. At the end of the day, deals are found at every part of the market cycle. And what constitutes a deal at different parts of the market cycle varies. But the killers and the guys that are capitalizing on every aspect of it are the ones that are going to survive and the ones that stick through. And these are the guys that don't go and, my real estate mentor, Kent Clothier, right? Like, he's an OG, man. He's been around. He was before that. He made money in 2008 when everyone else was getting caught with their pants down. He made money in it because he's a killer. He's a freaking deal maker. He's a hell of a businessman, right? And all his messaging was at this mastermind was just, listen, position yourself in such a way and be able to move and look at yourself as a CEO and a business owner and look at from the higher level and be like, what could we be doing right now to ensure that whatever happens to this market, that we're still hedging ourselves in the best way possible. And one of those things was finding deals that make sense for this market, right? And what makes sense for this market is value add opportunities, right? Making sure that you're buying stuff with equity, because at the end of the day, if you don't have stuff with equity, that's going to be your biggest windfall. If the market takes a 10% dump tomorrow, and let's just say that conservatively, we could talk about what we think the market's going to do, but let's just, again, we're doing hypotheticals, and this is what makes a good real estate investor, right? You think hypothetically, okay, let's say the market, there's some black swan event, feds raise the rates to fucking 12%, whatever, and like overnight inherently rates, like every values are going to drop, because that's just going to be what happens, right? Still with, you look at the numbers and like, okay, there's just not a lot of inventory. Millennials are a bigger generation than boomers. There's still going to be a lack of inventory. So while it will drop, it's not going to be a windfall to 50%. But if you buy something with enough equity in it, you're looking for those distressed assets where you could purchase something 60, 70 cents on the dollar. If you build a little equity into it on a renovation, there's a lot of different things you could do. You fluff yourself up a good 10, 20%. And then if the market drops 10%, you're not underwater. You don't have to go bankrupt. You don't have to, you don't have to go into foreclosure, right? Here's what happened in 2008, and what I'm worried about with people that are happening now. And this is what I told you about with the conversations I've had with realtors, and they're like, oh, my investors buy at 100% on the dollar because they're looking for tax benefits and appreciation and all that stuff. Listen, man, you can't appreciate and get tax benefits on a losing asset, right? I mean, you can, but you don't have an exit strategy with it. You're gonna be forced to hold it. And if you're a newbie investor, not even newbie, but like you're just starting out, you got a couple properties under your belt, you can't afford to take those big hits, right? You really have to make sure that these things are paying themselves off. So one of the ways we do that is by making sure that we're building enough equity into it. But what realtors say is, they buy at 100 cents on the dollar. That's insanely foolish if you're starting out. You could buy at 100 cents on the dollar if you're a multimillionaire. I think that's the only place where it makes sense. But for most mom and pop investors, guys like myself, guys that are just starting, anyone that's, still under $10 million in assets, in my opinion, should still be buying value add opportunities, because if you lose that 10%, that could really wipe you out.
Yeah, I mean, I don't think there's a doubt. And like one of the things, Mike Wolf, who I do a lot of stuff with, on the turnkey cash flow side of things, is he lost 70% of his net worth because of his properties going down in value in 2008, but his cash flow didn't change. So if you buy the right properties and you buy the right cash flow, you're going to be fine. So one of my mentors talk about cash flow not mattering, but cash flow, especially in environments like this, matters, because let's say you bake in 10%. Right, like of equity because you buy it right, but then the market corrects 20-25%, which is not an unlikely scenario. But as long as you have the cash flow to manage it, it will come back. You know what I mean? Like it's not having the cash flow to manage it. It's kind of like in 2008, it was like over 70% of the businesses that went out of business were profitable. They just didn't have the right cash flow, and because they couldn't take the hit, they had to close their doors.
So one of the things a mentor told me a while back, and always stuck with my head, and because this was probably around 2012, 2013. So this is as we were really kind of transitioning out of the recession, the Great Recession. And one of the things he made very obvious to me, and this was when I was a newbie and I really didn't know too much, but he said, like, in 2008 wouldn't have happened if people bought on cash flow instead of equity and appreciation. The people that are buying on appreciation right now, I don't care who you are, you're going to get burned. You're going to get burned.
Well, yeah.
Cash flow is king. And to what I said before, listen, it's very easy to talk about how amazing appreciation is when you've only been on the uptrend. There will be downtrends. And yes, over the long term, yes, real estate over the long term gets out of there. But guys, you got to be able to weather the storms, because there will be storms. And the problem is there's some people out there that are putting them in a position where they can't take a freaking light drizzle. you know,
Totally.
and you
For
know,
sure.
you know, if you have good cash flow, you could take on a hurricane.
Totally.
But there's guys that are literally so over leveraged right now that you know, a quarter inch of rain falls on the ground and they're going to be, it's going to feel like Noah's Ark. And you know, I think again, at the end of the day, the biggest thing that I say, like the strategies that I talk about, and you know, obviously in our other videos, I get more into why, you know, I focus so much on value add opportunities, is that um, you know, you have to recession proof yourself. And the way you do that is by making sure you have enough cash flow, and make sure the asset can pay for itself, versus making sure that, you know, you have enough equity there that you can take a value hit that, God forbid, you had to liquidate. You're not taking a loss, right? And then on the other end, with the cash flow, if it pays for itself, then you're not taking any loss. I mean, even if it just breaks even, you're fine because you're getting the tax benefits and everything like that. You know, where my dad kind of missed the beat a little bit was, you know, they didn't really have an asset that was able to cover themselves, you know, financially with the cash flow. You know, a little over leverage, pretty high interest rates, stuff like that. So I saw that, and you know, I'm a millennial, and I was you know, you know, my early 20s when the Great Recession happened, but I was around to see what happened to my dad, and I think there's a lot of people out there that just didn't see that, at least firsthand. So it's very easy for you to make these claims.
Well, and I think, you know, the other component we talk about, and we were talking about this before we went live, but it's just all these people that are starting to talk about investing for appreciation is a way to go, and cash flow is kind of losing its sexiness,
Yeah,
and people are talking about appreciation. But I think that's the nature of the cycles of things, right? Like as we get 12 years into this cycle,
people are very short-term memory.
totally, and they have this short-term perspective. But here's the deal for me. I've been speaking to this. I'd be curious to like get your feedback on this because
Yeah.
we've never talked about this. So
Okay.
I always kind of tell people your house is not worth $1 million or $500,000. It's worth your monthly payment, right? Now, right now, in the past, when interest rates would go up, typically that would reduce housing values because inventory and so on and so forth. And because inventory is so low right now, the uptick has really just kind of cooled the market off a little bit, right? Like, so housing values haven't dropped. What's happened now is now instead of 25 offers on a home at 100,000 over asking price, now we're seeing houses go for asking price or a little bit. It's more of a normalized market, right? Like that's what's happened, right? Like
Agreed.
we're back to a normal market.
You're spot on.
But for people that are looking long term, because we have to think long term, right? Like from any kind of investment or financial strategy, if you're thinking in these 5-year windows, unless you're somebody who's like burn and churn, like moving things, which I think, in my opinion, the buy and hold is always going to be the mecca of real estate, period, for cash flow, like for a lot of reasons. But when we look at the history and why all these people think houses just do nothing but appreciate and do nothing but go up in value and all that stuff, is because in 1979 interest rates were 20%, and they slowly dropped over a 40-year window, basically 35-year window. And what that did is it pushed appreciation up. Now there's naturally going to be a little appreciation in the market no matter what, because of inflation and all these other things.
Right.
But with the interest rates going down and now we're at lows and now they're going to go back up, that is going to have a long-term impact on what the next 20, 30 years looks like as far as housing appreciation compared to what the last 40 years looked like. It's like, you can't argue the math behind that. Like if
No.
interest rates are flat and we can't stimulate the economy by continually dropping the interest rates, and they have to stay flat or do what they're doing now to control inflation and go up like that, once inventory normalizes, you're going to see housing prices flatten out, potentially retract a little bit, and then go up at a more normalized kind of curve. What do you think
Hopefully,
about that?
that's what we would all hope for.
That's what we're hoping for.
You know, I'm a big fan of laissez-faire economics, right? We talk about, I respect history. I'm not a history buff, but I respect history,
Yeah.
and I think it's always hilarious when people think that we are somehow, we're somehow special, right? We're somehow, our democracy is somehow special than other democracies where corruption took over and stuff like that, and that's a whole other conversation. But the point being is, like, kind of like you said, it's looking at the past and looking at patterns over time and markets over time. And just like, if you honestly sit here and tell me and you think it's going to be a rocket to the moon forever, and there's not going to be things that correct this market, you're just arrogant. Like and again, you're probably a realtor. So the other end of it is, like you said, the normalization of the curves, right? And like seeing where, like, okay, why it goes in a certain direction. And there's something called affordability index. And that's what I've been telling people from day one. Like, at the end of the day, the market normalizes based off of what people can afford on their monthly payment. So while housing prices have gone up 28%, fucking wages have not gone up 20% or anywhere close to it. They're not even keeping up with inflation, right? So at the end of the day, I'm talking to my, talking to lenders in my space and everything like that. And they had to go back and, like, thank God me and my wife were able to close where we were able to close at. We closed at 5%, it would have been nice to close at 3.5 or whatever. But at the end of the day, like, we know what we could afford. And we knew what we can afford. But there's some people that were already kind of pushing their boundary. And once these interest rate hikes started happening, my mortgage lender friends and brokers and loan officers had to go back to these families and be like, listen, I know the market's tight, and sorry to rain on your parade, but you're gonna have to look for prices like about $50,000 to $100,000 cheaper, just because of how hard the rates have hit them. So the point I'm making is, at the end of the day, you could start bringing in hedge funds and all that shit, but the reality is, like, hedge funds are very specific on where they're buying, and even if they're buying, 1 million houses a year, it's only a dent in what actually is, like, there's 150 million residences in the, and they're still barely just making a dent. And they're very strategic, and they're only going after areas where there's no, property taxes, stuff like that, because at the end of the day, they need to make a return on their money somehow. And I'm telling you right now, you don't see them buying up developments in New York. The property taxes would just bleed them out to death. But the point I'm making is, even with them buying the long-term buy and holds, they need to see a return on their money. And if they think that they could buy at these crazy values and get their money back, they need to know what people are going to be able to afford on a monthly payment. Even if we turn into a renter's nation, the rents are going to have to be at a level that makes sense where everybody can be a renter, right?
Totally, man.
It's, and that's what people don't understand. I try to tell these people, I'm like, yeah, listen, okay, these hedge funds are buying at 100 cents on the dollar and they're buying up all these things, but, like, okay, they have to be property managed. So you're buying at 100 cents on the dollar. Like, how are you going to make money? Are you doing it only for tax? Hedge funds aren't in the business of losing money. They're in the business of making money. So if you're buying at 100 cents on the dollar, how the hell are you making money? It's taking you, and again, while keeping rent payments at a level where people would actually pay for it. Because I'll tell you right now, there's a lot of people in this world. I mean, we're turning into a little bit of a renter's nation, but if I'm a renter, I'm going to a high-rise building where I have all my amenities. If I'm going to be renting a single family home in the burbs with a backyard and all that shit, and I'm going to be, like, required to take some maintenance, you bet your ass I want to own that house. The American dream's a real thing. You want to make sure that you have equity in that thing at the end of the day. People aren't stupid. And if you think that America is going to turn into a complete renter's nation, I think you just don't understand American culture. And then that might change. But ultimately, like you said, I tell people all the time, like, you could say that it's going to go to the moon. There's only so many rich people in the world. And at the end of the day, you're going to hit a number where a 30-year mortgage rate with taxes and everything involved, people are already capped out. So where else are they going to go? Like, people are going to literally just back out of the market for no other reason, but they don't have any other option. That's it.
Yeah, man. I mean, I think it's scary. So I was going through, because last week, at the end of the week, the new CPI numbers came out, 8.6% inflation, which I think is a joke. When you look at the real numbers behind the scenes and kind of what's going on. So when I was going through,
the numbers are not real.
No, and it's low. Just because they're balanced improperly. Like, all the things that most people spend a higher percentage of their money on are given they're weighted on a lower level than they used to be. And so that's one component to it. But the crazy thing that I actually saw that was kind of scary to me is that people just don't have money. And I think people are in a position right now where they're not spending money on things that typically are being spent on to keep this economy going. And it's when you go to the BLS department, look up the May inflation report, right? And when you look, you see energy prices like gas and oil 45, 50%, 106%. Food is 20%, you know, like all these things. There's like the things that we need, electricity and gas and natural gas and oil and all these things that everybody has to spend money on. Those things are going through the roof. But then it was smartphones, televisions, sporting events, jewelry. Every single one of those saw double-digit retractions, negative growth. Like, I don't know about you, but that just tells me like everything's getting so expensive over here. Nobody's spending money on these things. And guess what? Those are the things that keep the economy going. Because now you get companies like Best Buy and Target and Walmart. Like if they start to struggle and those stocks start to struggle, like the ripple effect of all that is just catastrophic.
Well, you know, you're finding what actually happens when we stop faking it. And we like right now, you can't fake it anymore with gas prices and everything being where they're at. Like we could, you know, politicians can sit and make up all kinds of lies in the world on what's actually happening. But, you know, and it goes for both sides. I'm not, you know, I'm right in the middle. I don't believe in any one politician, but the idea that everyone's kind of just, you know, punting the blame and whatever. And ultimately, we had a black swan event that completely flipped everything upside down. I don't know if I agree with how it was handled, but I understand nobody really knew what the hell was going on. But to think that we're not going to feel the brunt of that in one way or another is just stupid. And like you said, people aren't spending. I think you maybe saw that article. There was like an interview they did with a stripper, and they said, strip clubs are a recession indicator, our leading recession indicator, or a leading economic indicator. And I'll tell it. Then the stripper's like, and I'll tell you, we're in a recession, right? They're like, you know, she's like, nobody's showing up anymore. All of a sudden, as soon as gas prices went up and interest rates went up, our clientele just vanished. You know, and you're right. You know, it's bleeding people dry. And it's if people just understood and people actually took this serious from day one. You know, I was telling my wife, and I was remembering back, like, you know, when all the stimulus checks came out, and it was like at the mall, and this is like pandemic, you're not supposed to go out, everything, like the mall was slammed as you know, as those stimulus checks came. And I'm telling you right now, Louis Vuitton line was down the mall. Gucci line was down the mall. Like people going into, you know, Apple store down the mall. And listen, I get it. And I get like, you know, it's cool. It's great. You know, like you said, like it's good to, but in a healthy economy, like if you thought for a second that you were going to print all this money and people were actually going to put it towards something important and something that really mattered, maybe it would have been worth it. But there's no way in hell. I just knew the second they did that, I'm like, I don't want your drug money. We're going to be paying this way too long. And that was just something that just added too much fuel to the fire. They printed more money than ever. And I think that was the icing on the cake. And that's really what screwed us over, because, you know, it's that, you know, you can't you can't have that consumer mindset, because that's ultimately what will kill the country if they don't do that. So, you know, everything I promote is just, you know, listen, I spend my fair share on dumb shit as well, but especially in this last 2 years, I've tightened myself up a little bit, and I've been conscious of that, because I knew, and I saw the writing on the wall, man. I was like, I knew what was going to happen, and sure enough, everything's kind of playing out the way I expected it to. It's just, you know, just trying to be smart with where I'm putting my money, and making, you know, not splurging on a house. Could I have splurged on a house these last 2 years? Overbid $100K over asking? Could I have done it? Yes. Did I do it? No, I fought the urges because I knew what's coming, and I don't want to be positioned in a fact where I finally find me and my family a house and I have to be put in a position where I got to pick if we could stay or not. I never wanted that to ever be even close. And that's why I bought undervalue and waited it out.
That's awesome, man. No, I mean, I think so with where we are now, like if you were talking to somebody, because there's a lot of people that are looking to get their real estate journey started. They're trying to, you know, just launch their investment career. You know, I don't know if we've even spoken, but like I don't think we have, since I launched my book, Cash Flow Hacking. And it was you know, like I get a lot of people that reach out that are like, hey, I want to buy my first investment property. I want to get going. And it's like, I've been thinking about having you on here for a while
Yeah.
because of the fact that, like, listen, there's not a lot of deals out there. Like, and I've got a whole pipeline of people that are like waiting for a turnkey rental property right now because the inventory is just like the right inventory. Because we won't just buy any property and just put people into it for the sake of selling. It's got to be, the numbers have to make sense. And unfortunately, right now, in a lot of these markets, the numbers just don't make sense. And your way is a way that if people are sitting on capital and they're willing to do a little work, they can get it going, right?
Yeah.
There's always opportunity. So if you were, you know, in 5 minutes or less, if possible, because I know we're running up on it a little bit, but
Yeah.
what would you do if you were somebody that had 50, 60 grand in the bank, you wanted to get started, you know, and you know, just where would you start? And real estate was something you wanted to be involved in. What would you do?
Well, I'm biased. So we talked a lot about bias, but my bias is this. You know, the way I got started is the way I think everybody should get started, and that's to buy a distressed small multifamily property with a renovation loan and build both equity and cash flow into your first live-in property, right? You get all the benefits. You get to put down a low down payment, low interest rate. You get to wrap the renovation cost into the mortgage using 203K loans, home style loans, loans like that. And what that allows you to do is it allows you to take advantage of owner occupancy rates while still building equity and cash flow and getting all the good benefits that an investor gets when they first start out. You know, at the end of the day, like we said, everything is built on cash flow, right? And to make sure that something cash flows, you have, in this day and age, you have to spend the extra time to find something that has a value add opportunity. What I mean by value add is that you're finding something distressed, building equity, building value into it, and then now acquiring and having that asset be a new, you know, an upgraded asset that you can cash flow off of, right? And we don't have the luxury as new investors to go buy turnkey. You know, turnkey, as we were talking about before the call, but I'm not a fan of turnkey. I think turnkey is great, and there's a lot of positives to it, but ultimately, when you're first starting out, you really need to get to the grindstone. You need to get your elbows deep in it. You need to put in those extra things to pull those levers to get you the maximum amount of returns, right? Like, so the way I pitch, you know, my strategy to people is like, you know, the 203K loan and all these different tactics, they're just tactics, right? At the end of the day, everything's built off of value add real estate investing. And what that is buying, you know, again, buying a distressed asset, building at value into it via forced appreciation, via a renovation, you know, finding ways to reconfigure the environment, getting crafty and getting really tricky with these different ways that you could pull every single lever to maximize your cash flow, because that's going to give you the biggest boost, to really use leverage and really use that to constantly build yourself up. You need that quick jump start. If you want to do turnkeys, you got to have a lot of cash, because to get to a point where you're going to be able to get enough money for you maybe retire your job or anything like that, turnkey's like really, you know, it's maybe a little better than the stock market returns, but really not much. You get some benefits, but it's not going to make you a millionaire. You know, you might have to be a millionaire already to start doing it. Now, again, there's ways around it and there's different things to do, but you know, again, for me, you know, if you're younger, you don't even have to be that young, but like,
more money to start a turnkey process. That's
yeah,
all.
it takes more money to really see the return. And it's very easy for guys that are millionaires to say that it's good to go turnkey. But when you're just starting out, you have to see those returns immediately, man. It's like bootstrapping a company. Like, you got to start early. You got to get to the grindstone. But like, once you start seeing that momentum, yeah, then you start subbing out. Then you start like using that cash flow, using that equity that you're building to start really amplifying, getting that velocity of money going. But in the beginning, you want to pull the biggest levers to get you the biggest returns. And, you know, finding those distressed properties right now takes a little extra work. It's one other end. I mean, you made a mention, like, the deals are hard to find now. Deals are hard to find always, man. You know, back in 2010, 2011, 2012, deals were hard to find because everything was quote unquote deal, right? So when everything's down here, you're going to have to go even below that, right? I remember like
Yeah.
flipping wasn't really lucrative because you were flipping and like there was so much inventory that was you had to still take price reductions and seller concessions and everything like that. And it was like, is it even worth it? Right.
And
So
competition goes up.
right. And it's just
Everybody floods to the market, right?
right. Like wherever the deal is on the spectrum, right? And I know I kind of have my blurry thing on, but like if the market's down here, right? If the market's down here, a deal is going to be down here. If the market's up here, a deal is going to be over here. It just goes with the market. It doesn't matter where it is. You just need to find the opportunity where it's at. So, the difference now is maybe you don't find deals on the MLS, or you don't have the opportunity to just cast a wide net on MLS, which I know people that still do it. I do it. There's guys in my group that do it. But if you have to get crafty, you have to start going off market, right? How me and my wife found our property, we started sending mail out. It's old fashioned, but it works. And when you have the right messaging and you cut through the noise like we did, we only invested, about $2,000, but we found something that worked. And we found something for $100,000 under what it was valued at for spending the $2,000. I mean, I don't know about you, but I would spend $2,000 to make $100,000 any day of the week. I'd spend $20,000 to make $100,000, right? And doing those things, doing the things that people aren't willing to do in this market is really what's going to separate yourself. And you have to grind it out. There's no easy way to do it right now. If you think there's anything on the planet that's going to make you money that's super turnkey and easy, I got a bridge to sell you, man.
Especially right now, it's you got to wait for the right opportunities, and either that or you got to go create your own opportunities, right? Like there are environments where, listen, when foreclosures start coming back, and if you can tap into the right groups and take advantage of that and like whatever, then it can be great if you want to be a little bit more passive out of the gate. But right now, to think you're going to start with passive and get a good deal and be completely positively cash flowing and all these things, you got to go create your own opportunity. You got to be able to, and willing to get your hands dirty, and it just is what it is, So
yeah, I've spoken to a couple guys that are like new millionaires, and they made some money with a whole different stuff over the years, and they come to me about asking about real estate and like, oh, what can I do? Like, hey man, I want to get into real estate. I'm like, all right, like, oh, I got some money to invest, but I just want like super passive. I'm like, real estate's not really that passive. I know people say it is, and I know people make that claim that it is, but when you're starting out, it's super active. And even my passive assets I have now are still active. Because I'm younger, and I'm trying to get that, like, I'm not a multimillionaire yet. You know what I mean? I want to get to that point, but again, you have to grind to get there. Like, it's kind of like going to a Vegas casino. And you go to a Vegas casino and you it's like going to a casino in AC versus Las Vegas, right? If you go to Vegas, in Atlantic City, you're putting $25 a hand, you think you're hot shit. You're like, man, $25 a hand blackjack. That's like pretty serious blackjack, because most of the casinos like $5 blackjack hands. You go to Vegas, there's nowhere on the strip that'll even allow you to sit down for less than $50 a hand, right? So it's kind of that real estate's that world where like there's a lot of big fish there, man, and it's somewhere very different. That like in order for you to play, like there's a reason why all the big money's there, and for you to play, like when you're a young guy, you're a new guy, and like I said, under $10 million like in assets, like you really got to really start pulling those levers and using that leverage, because
and the reality is, so full transparency, my wife and I love turnkey, right? Like, and that's how we started, was the turnkey world. And that's what I do with Mike Wolf. That's what I mean, I love it. However, it's not completely passive. It's more semi-passive, like by doing it properly. And he goes in, he buys the properties, foreclosures in groups, in blocks of properties, 40, 50 at a time. So he's the money going in and he's passing it on. You get into the community, and that's kind of how we do what we do. However, there's still like things that happen with the properties. It's all managed. It's all like whatever, and it's great. But it was better in 2014 through 19. Like now it's like impossible to find, where we would start off before, where you could start off cash flowing 12 to 14%. Now, if you can cash flow 6% out of the gate, you're doing really well. You know what I mean?
That's what it is, right? Yeah, that's what it is. Like I said, it changes. Strategies change, given where the market is, and as long as you respect that, you're always going to do fine. I'm not saying turnkey doesn't work, right? And and you understand that. You know where I'm coming from on it. I'm just saying, for guys starting out now or starting out in general, that's my biased way of getting into it. I just really do think that And it's easy for me to say, but but having gone through it, it's worth it. It's absolutely worth it.
Well,
You just have to,
yeah.
you have to respect the game.
Well, hard work is never going to go out of style, right?
Well,
Like,
that's for damn sure.
I mean,
Yeah.
that is what it is. I mean, you're never going to be able to beat the sweat equity component of this. You're able to build in net worth by you taking the time to find the deals, taking the time to work the deals, leveraging the government programs ultimately, because that's really FHA with a 203k, right? Like that is the government subsidizing your investment effectively in a way, right?
It's literally the cheapest flip money. There's no more powerful form of leverage out there, period,
Yeah.
for the average person.
And you could do
Period.
it.
I will fight to the grave on that statement.
Nice.
There is no more powerful form of leverage for the average person to use than 203k or FHA loans. There just isn't. And even if the government got rid of the program, there's other loans out there that are very similar that do the same exact thing. But again, it's all built on the fact that you're owner occupying. But that's what you do to get started, right?
And you could do 1 to 4 units, right?
Yeah, you could buy up to a 4-unit property, and it allows
Awesome.
it allows you to just blow it up really quick.
Yeah, that's
and
amazing.
Then you slowly snowball from there. But that first big one is a big hit, right? That's going to be the one that gets you moving.
The challenge that I find with that, my wife and I have actually thought about doing this, is there's not a lot of 4-unit properties in Arizona where we live, and we have a pretty nice place or whatever. We even talked about even selling where we live to go like have a fun project. If we could have found the right duplex or quadplex or something of that nature that we could live in, do a 203k, do something like that. But the only places that have 4 units or 3 units or 2 units even are in places that, quite frankly, we don't want to live.
Yeah. Well, listen, it's not for everybody. And I've told people that before, and I'll be very straight up with it, right? Like, it's not for everybody. Yeah. And especially when you're starting out, like if you have a house already, like it's tough to go back into that multifamily world because, again, like you said, multifamilies are usually in the inner part of town, and FHA calls you out on that too. Like if you have a nice house, you have your nice single family house, and you go tell them that you're going to go move your family into a quadplex in the center of town next to a train station, they're going to call bullshit, and they're going to know that you're not doing that anyway. And the loan's built for that purpose specifically, because again, it just doesn't make sense. That being said, there's ways around it, and there's different ways you can kind of like, stay within the guidelines and skirt it. But the resounding thing again is that these rental loans exist too. Like you can use a home style loan like me and my wife did for single family. And it's, and there's and home style offers a version where you don't even have to live there and you only have to put 15% down. So it's still it's better than hard money. It's still the bank's money, still subsidized by Fannie Mae. And these are things that you're really good rate. Again, you're still taking advantage of the strategy, right? Whether you use the 203k, you use a multifamily, this thing still works for a single family. I tell people all the time, me and my wife just did it. We're looking at 100k in equity on our own home. Now you bet your ass I'm taking that equity, I'm going to do stuff with it, right? But it's the value add. It's the value add premise, and making sure that that's really that's the crown jewel, and that's going to be what's going to be feeding you and helping you out with leverage to really skyrocket it.
Awesome, man. Well, cool. So I know we're running out of time here, but guys, everybody watching this, I would say go check out Matt. His YouTube channel is awesome. He's got a lot of great content. I've done a couple videos with him. You'll see it on there. Search 203k, you'll find him. What is it? The 203k way is your YouTube channel? The
yeah, you could just look up the 203k way. I'm sure you'll throw it down in the description. But
I'll put a link
look up the 203k way. Instagram is my main hangout. That's where you find a lot. I'm working on YouTube. I'm trying to be like Chris when I grow up for YouTube as far as YouTube's concerned. So I've been releasing the video about every week on there. Nice. As well as, my YouTube channel or my Instagram channel. But you can find me anywhere. I answer all my DMs on Instagram. If you want to send me a DM on Instagram, reach out. Tell me you found me from Chris's channel. I'm more than happy to chop it up with everybody, help you guys out. I'm an open book. I don't keep anything behind anything. I have a program and stuff like that, but those are for only people that are looking for the extra help. At the end of the day, I give it all out there for free, and I want anybody to never feel like they were in a position where they couldn't take advantage of this thing. You know, and then that's what I live by.
That's awesome, man. Well, thanks for being here. We gotta do this more often, because
We really do, dude. I gotta bring you on mine to go
totally
the other way around. So
anytime. We because listen, I think right now we're going into this world where what you do is going to become even more sexy than it already is, because of the fact that, you know, people are going to be just looking to grind and figure it out, because like I said, hard work is never going to go out of style, and it's going to become even more important now over the next 2-3 years, I feel like, then
yeah, we're gonna have to get scrappy. We're gonna have to get scrappy, and you know, and like to leave off with my mentor said, and again, this is an experienced guy that I respect highly. The next couple of years, it's going to separate the men from the boys and the women from the girls, and because it's, again, a lot of people had it really good for a while, and it's going to show who really has the grit. And listen, that could mean a really, really good thing, or that could mean a really, really bad thing. I mean, I would say a precursor to what's to come was the pandemic. If you sat around and used the pandemic to fucking bake bread and come up with new recipes and catch up on every episode of Lost and
just binge
Thrones and everything like that, and you weren't using that opportunity to stay home and just fucking grind on the internet, and find ways to really set yourself up and learn and get educated, then the next couple of years are not going to be good for you. But I think for the people that really grind it out and they know and respect what's coming, you'll be good. You'll be fine.
Yeah, I was talking to my wife about this because she runs a luxury real estate team here in Arizona, right?
Yeah.
And so, you know, it's interesting because, you know, she just got done. She won the Mrs. America pageant. She was Mrs. American last year, like, and so she took basically a year off from working, and so she's like getting back into it now. And I'm like, we're like investing in her brand and coaching and all these things into this market. And I'm like, man, like I have zero expectations for the way the market is going, you know, for her business. But I'm like, we're not doing it for the next year or year and a half. We're doing it so once we get through it, those that survive are going to crush it.
Yep, absolutely.
So,
I mean, listen, it's a long game. Long game.
Yep. And that's what it's all about. So, well, cool, man. Thanks for being here, guys. I will put a link to all of his social channels down below in the description. So just go down, check him out, link over, make sure you follow him. And dude, we'll do this again soon.
Yeah, Chris, you're the man. Thanks for having me on, dude.
Thanks, brother. All right, guys, have a blessed, inspirational day. We'll talk soon. See ya.
Sure.